Hello, thanks very much for joining us. And here are stories making headlines at this hour. I'm Michael Nath. Electricity distribution companies on Sunday reacted officially to the takeover and restructuring of 5 discos by the federal government through the Bureau of Public, describing the move as a backdoor rationalization of the power firms. They claimed that investors in the 11 discos were shortchanged by BPE when the facilities were privatized in November 2013, while the government had failed to pay the 100 billion naira subsidy on the electricity since the privatization of the sector. Speaking under the aegis of the Association of Nigerian Electricity Distributors, an umbrella body for the power firms, the discos expressed concern about the restructuring of the 5 companies as announced by BPE on July the 5th, 2022, in collaboration with the Nigerian Electricity Regulatory Commission. The federal government, through the BPE, had announced the planned takeover of Kano, Benin, and Kaduna electricity distribution companies by Fidelity Bank PLC after the bank initiated action to take over the boards of the 3 discos. It outlined other areas of failure by the government, including its inability to implement a cost-effective electricity tariff, stressing that this singular unfulfilled condition had led to accrued significant debt and liabilities on DISCO's financial books as DISCOs continued to sell electricity below the cost price. Assets under the contributory pension scheme rose by 842.73 billion naira in the first half of 2022 to hit 14.27 trillion naira as of the end of June. Figures obtained from the National Pension Commission on its unaudited report on pension funds industry portfolio for the period ended 30 June 2022. The data showed that 9 trillion naira of the total funds was invested in federal government securities comprising bonds and treasury bills. Other investment portfolios where the funds were invested included domestic and foreign ordinary shares, corporate debt securities comprising corporate bonds, corporate infrastructure bonds, corporate green bonds, and supranational bonds. According to PENCOM, the total number of RSA holders stood at 9,795,957 during the period under review. The Director, Center for Pension Rights Advocacy, Ivo Tako, said, quote, "The funds are invested by the pension fund administrators on behalf of the workers based on guidelines issued by the regulator. According to the Pension Funds Operators Association of Nigeria, the CPS has helped to foster a savings culture in Nigeria." The Central Bank of Nigeria has advised Nigerians not to succumb to the speculative activities of some players in the foreign exchange market. CBN's Director Corporate Communications, Osita Wanisiobi, advised on a statement on Friday against the backdrop of rising demand for foreign exchange for both goods and services. Wanisiobi said that the CBN remained committed to resolving the foreign exchange issues confronting the nation and had been working to manage both the demand and supply challenges. He said that the Apex Bank was concerned about the international value of the Naira. He said that the Monetary Authority was strategizing to help Nigeria earn more stable and sustainable inflows of foreign exchange in the face of dwindling inflows from the oil sector. The director said that recent initiatives undertaken by the CBN, like the RT200FX program and the Naira for Dollar rebate scheme, had helped to increase foreign exchange inflow. He said that CBN's records show that foreign exchange inflow through the RT200FX program the first and second quarters of 2022 increased significantly to about $600 million as of June. The Center for Promotion of Private Enterprise has said forex scarcity in this country has greatly endangered the capacity to create new jobs and retain existing employment. Invariably, the center noted that a sharp depreciation of the exchange rate and operation of the parallel market which is over 300% due to the scarcity at the official window, has worsened the profitability of investments in the first half of the year 2022. According to the founder, the chief executive officer of CPPE, Muda Yusuf, many businesses have suffered serious dislocations as a consequence of foreign exchange liquidity challenges, volatility, and the depreciation of the currency. He said the dysfunctional foreign exchange policy has negatively impacted foreign direct investment, foreign portfolio investment, as well as other capital inflows into the country. Yusuf lamented that the inability of foreign investors to repatriate their profits and dividends as well as incomes has created considerable perception and reputational and country risk issues for the Nigerian economy. All of these have been responsible for the sharp decline in capital importation in recent years, he said. They listed, among others, the high cost of production due to the high import dependence of the manufacturing sector for imported raw materials as implications of the foreign exchange crisis for the investors. The exchange rate between the Naira and the US dollar fell beyond the 700 per dollar threshold at the parallel market on Wednesday, 27th of July 2022, despite starting the day at 675 Naira per dollar. Although many worldwide currencies have indeed declined in value against the dollar, the situation is worse for the Naira because Africa's largest economy and top oil producer continues to import petroleum products, distorting its export margins. Speaking on the IBrandTV's Business Breakfast earlier in the day, finance expert Mukhtar Mohammed spoke on the effect of Naira depreciation on SMEs, while assessing the impact of CBN's policies such as the Naira for dollar and RT200. He maintained that more needs to be done.
Like I said, we are an economy that depends solely on imported goods, especially for our day-to-day living. And so with the current Naira depreciation, you see that the cost of living has gone up. That is majorly the main challenge. Inflation also is up, and also that means the cost of services also have gone up. And then we saw the CBN coming up with hike in the interest rate. That means also that the cost of lending also have gone up. And then in turn, those companies will put those burden on the consumer. So basically, what we're seeing now, we're seeing an inflation that is driven by production, that is driven by market forces, and that is driven by macroeconomic policies. So all three are operating at the same time in the Nigerian economy. Look, the CBN have done so much in the monetary side. The physical side has to do their own. They both have to come together. And that is when you begin to see results in physical policies. I mean, in monetary policies. But when you see the monetary policy seems to be doing everything, even including helping the physical sides, then you know there's a challenge. So presently now, most of all the effort by the CBN is not yielding the desired result because the physical side are not doing what they ought to do. And when we're talking about the physical side, we're talking about government. Like I said, we are talking about government-owned policy. Okay. I just make mention of trying to increase tax for phone calls, not ready to take bite, infrastructures are decayed, there's no power. Those are not the work of CBN. So basically, we are not seeing those impacts because the CBN is doing so much in the monetary side and the physical side seems to lack ideas.
The Association of Bureau de Change Operators of Nigeria has cautioned the federal government against policies that can worsen the impact of the upward inflationary trends on the populace. ABCON gave this warning in its quarterly economic review for the second quarter of the year, for second quarter 2022, noting the severe impact of the sharp rise in commodity prices triggered by the COVID-19 pandemic and the ongoing Russian war in Ukraine. ABCON called on the federal government to cushion and reprioritize its spending with an emphasis on targeted relief for vulnerable populations in the light of higher inflation, weaker economic growth, and tighter financial conditions. Such reliefs, ABCON explained, should include comprehensive harmonization of all local, state, and federal government taxes, which currently are imposing a heavy burden on the citizens of Nigeria.